What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with John Casmon. How you doing today, John?
Hey, I'm doing great today, man. Thanks for having me on here.
Oh, it's my pleasure, and I'm particularly excited because I don't know if you know this, John, but my very favorite audience member is here today. And why is my favorite audience member here? Well, it's because it's a chance encounter. What do we do here? I interview commercial real estate syndicators, investors, and operators. And why do I do that? Well, part of it is because you need to know if there's any overlap with your own business, and then that way you know if you can continue. But the other thing is it's actually the law. You're not really allowed to talk about your private deals unless you've got a documented substantive relationship, whatever that means. But before we get too excited about substantive relationships, because that's a real holding the edge of your seat sort of thing, John, can you introduce yourself to the audience, please?
Yeah, real quick. Name is John Casmon. Excuse me. My name is John Casmon, and I live in Cincinnati. I am a multifamily investor. I work with other people to buy larger apartment buildings. We have helped investors invest in over $120 million worth of apartments. And prior to that, I was actually in corporate America. I did advertising and marketing for big brands like Coors Light, Nike, Mountain Dew. I also host a podcast myself called Multifamily Insight. So there's a little bit about me.
Sweet. And one of the things that I do on here is that sometimes I interview newbies, and the problem with that is they know why they want to do this, but they don't know what necessarily they're going to be doing in this business. Let me get my slideshow a little bit bigger there. That's pretty good. Okay, so I have these 5 different distinct motivations, and the key thing is that, people get into commercial real estate for all sorts of reasons, but that doesn't mean the reasons are distinct. But this narrows it down a whole lot more. So the first motivation I find some people have is they're looking to preserve their purchasing power. People who are in this position, they've already got assets, and they probably make ends meet by the cash flow that comes from owning those assets. But when inflation rears its ugly head, there's a problem. They need to make more acquisitions or else the party's over. So that's why some people are making more commercial acquisitions, but that's not my main reason. My main motivation is trading time directly for wealth. Now, I know that you might know me from real estate as a scam.com or the book or whatever, but my background is in technology, and I probably ran into the exact same thing that John did, which is if you're earning a high salary, you're giving most of your money away to tax, or at least you're paying way more in tax than anybody else. So it hit me personally. It's like, well, why don't I pivot? Instead of working hard to make a bunch of money, pay away tax, and then put whatever's left into my investments, why don't I go directly into the investments and then get that multiplication working for me that way? So that's why I'm doing this. But that's not the most popular reason. I'd say the most popular reason is because people want to take control of their time one day. I think that if you don't have some sort of like equity play or something similar to real estate going on, I don't think you're leaving the door open for retirement at all. But maybe you're more concerned about working fewer months per year, or fewer weeks per month, or fewer days, fewer hours per week, whatever it is. And that's what some people are up to. But again, that one's not my big one. The main thing about them, and it managed to skip one because it double clicked. Some people are super duper ambitious, and that's why they're into this, and they want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And so they're just going to keep on hustling and hustling until they're in their 90s. And that makes them a great teammate because that they're not going to disappear on a beach in the Philippines. But the last group, they're also going to keep hustling into their 90s. They have found a sector of society, or maybe it's the environment, or maybe it's animals, or they want to send people to Mars, or who knows what it is. But they realize that you have to do a lot in your financial area if you're going to be able to have that kind of big impact on people. So John, as far as those 5 motivations go, what really jumped out to you and describes you best? Like, what combination of them?
Well, I think there's 2 that jump out to me. One is going to be trading your time, making sure that you control your time and you can be present in the things you want to do. That was really important for me. I've got two little boys, and being a present father is a really big driver for me, and making sure I could have more free time to be at activities and things like that. It's kind of how I measure success. So that was one. I think the last one's the other one, right? Helping other people, recognizing that there are a lot of other people who are in the same boat, who are looking for financial freedom or at least more flexibility, and don't have the means, don't have the patience or the time to invest the hours that I've spent learning real estate, going to conferences, listening to podcasts, launching my own podcast, attending events, meetups, reading books, articles, being on the forums. I mean, if you add it all together, I mean, it's probably hundreds and hundreds of hours that we've invested at this point, if not thousands and thousands of hours. So most people don't have that time to do it. We've been doing this over a decade at this point. So for them to work with someone like us is a much better path than for them to try to start where I was maybe back in 2008, 2009, being curious and interested about this, but at the very beginning of that journey. So if you can leverage someone else's, experience and the journey that they've been on, and allow that to kind of fast forward and catch you up, well, now you can just kind of hit your wagon to a train that's already moving fast, as opposed to starting from scratch yourself.
I absolutely love it. And that brings me to my next question here. So the next slide, it has to do with the tolerance for risk. And I made this question because I thought that the questions that most securities attorneys asked as far as investors go on how's your appreciation of risk. I don't think it really does a great job, but I think this one tells you a lot more. John, can you please fill in this blank? There are many popular investment asset classes or types, but I think blank is too risky. What's too risky to be for you, John?
For me, it's crypto. And I want to be really clear that I think the application of blockchain technology and all that stuff is amazing and will be huge. But when you talk about investing in crypto, where there's not the functionality behind it, so that could be anything from NFTs. Some NFTs do have functionality. So I'm not talking all NFTs, but many of them do not, or even just coins. But again, if you're investing in something that doesn't have the functionality, then I think it's a little too risky for me. The reason I like real estate is it's secure. There's a building, there's land, whatever it is. There's a physical asset that you can see. You own it, it's there, it's not going anywhere. Even if the building burns down, that land is still worth something. So I like the tangibility of it, that the fact that we like multifamily where people need a place to live. We see all the data says that we are in a housing shortage, that we don't have enough affordable housing right now. So there's opportunities to solve those problems and to, create generational wealth with that. When you look at something like crypto, again, I'm speaking broadly, but I think a lot of people just hear that, go into it, and don't understand it. There's also a whole lot of fraud. I know a lot of people who had money just completely stolen from them. Binance just wiped out a ton of people's accounts that they had. So there's just a lot going on there. And I think that if you don't really understand that space, if you're not investing based on the functionality and really understanding where the need is and the upside and who you're targeting and all of that, that to me is too risky. And I think there's a lot of speculation in that space.
Yeah, I love that. And really, it is one of those things where, like with crypto, because it's somewhat of a commodity, it's still scarce. But the fact, like, you can't force appreciation. You can't make your Bitcoin worth more than the next guy's Bitcoin unless you just find a seller yourself, I suppose. But let's get on to the what. We just finished the why. John is in this, but if you go to dandoesdeals.com, which is my other hat, I don't think I'll switch it today. If you go to dandeals.com, you can get your own six-sided die here with the 6 different roles, and it's totally free. I don't even ask for your email address. John, you're a marketer, so you know that that's the stupidest move that you can do in all of marketing, is not ask for any email addresses. But my big thing is I want you to be able to effectively communicate on the subject of commercial real estate, and that's why I go through each of these different roles in every single one of these chance encounters. So let's get started. First one, one, the repositioner, looks at a bunch of different properties. And what are they doing with all this paperwork and all that? Well, the first thing, you have to understand that they're an acquisitions person. So that means they're buying it, which means they're interacting with sellers and brokers. So the first thing that they're going to have to do is they're going to have to find out, is this property actually making what the seller says it is? And that's part of underwriting. That's the fancy word. It really means doing the math, finding out, it's like, okay, so how does this business actually work? But I call them a repositioner, and that's somewhat of an uncommon term because it includes what the repositioner is actually doing to make a difference, okay? And the answer is they're changing the property somehow to find upside. Now, repositioners have three main tools in their tool belts to pull that off. The first one is finding more advantageous lending. In other words, if it's a lower rate, then of course they can do better if they've got cheaper money. But let's assume that that's not going to happen. So the repositioner, their main way, their first way to make more upside is to make the operations more efficient. You get fewer of those Benjamins going down that toilet. But of course, there's more to operations than just unclogging toilets, collecting rents, taking out trash, things like that. There's also a marketing piece, which is the leasing agent part, making sure that the vacancy rate is super duper low. But there's also some other automations you can make as far as maintenance, scheduling, tasks, and things like that. And that's one of the main things that I tend to bring to my GP teams. But operations is probably not going to be enough for most properties to really have enough upside. So the repositioner will often have to get a contractor team to do what they call a value add. Other people would call that a renovation of the units. But the main idea is that if you make the units nicer, then new tenants will be happy to pay more than the previous tenants, and there's your upside. But if the repositioner is like me and they're from the internet, they're going to need a local. Okay, you need somebody who can be there in an hour or two to fix things up, because in an hour or two, I'd still be messing with the airport. So that's not going to be me. But I mentioned the financiers before, and of course, when the repositioner's done all the math and they've got their business plan, they're going to turn around to the financier and say, "Hey, I got this property and I need tens of millions of dollars to close it and pick it up. You don't happen to have, say, tens of millions of dollars, do you, financier?" And they'll say, "Okay, let's see, let's take a look at the property. Okay, here's the team. Okay, that's cool. But who's your KP?" And in a lot of coaching programs, they kind of gloss over the role of the KP. And this is how it works. If you want to be eligible for the loan, for one of these commercial loans, somebody in the fold has to already own a similar asset. So if it's a 350 unit apartment complex, you're not going to be eligible for the loan unless you know somebody who's in the deal and is willing to sign on the loan. And on top of that, on top of just having that team, you also have to have a certain amount of liquidity, and then you also have to have a balance sheet among the GP team, between the owners, of at least the amount of the loan. If you have all those pieces, then you've got yourself a commercial real estate deal. So, John, as far as your core competencies go, as far as what you contribute to your next deal, what roles do you tend to take up?
That's a lot you just went through, but really informative information there. For us, we take up a lot of those roles on the GP side. Depending on the size of the deal, it kind of just depends on where it is. We do like deals that are closer to us within a 2-mile radius, but we will partner with other operators on deals that are a little further outside of that threshold. So it kind of just depends. We have a lot of relationships. We definitely can bring capital to deals. We're certainly help with operations, being asset managers. And then obviously, again, it just depends on the deal size. We may bring on other partners as well. So.
Great. Awesome. So then my next part would be about the ideal property. And when commercial investors are talking to each other, syndicators and whatever, and we say, "Hey, what's your buy box? What's your ideal property?" Really, they're asking for, I like to say, 3 things. The first one they're talking about is the geography. You've heard of the location, but the geography in this case, it means what states, what counties, what neighborhoods, even possibly. Where is this property where it's really easy to fit in with your current portfolio? That's the first part. Second thing is going to be the size of the deal. And we generally talk about multifamily on this show, but the other forms of commercial, you've also got self-storage, you got office space, you've got warehousing, you got mobile home parks, these different types. You got warehousing, and industrial and warehousing go off of square footage. But in general, it's the unit count is what people really need to know, because taking down a 350 unit apartment complex, it couldn't be more different from doing something like a 5 unit. Okay, so the size really matters in that case. But the third one, that's the class, and unfortunately they use the same word for two different things, which is one of my pet peeves, but what can you do? The first meaning of the word class, it has to do with the condition of the building. So how old is it? How luxurious is it? How beat up is it? Okay, and then the other meaning of class, it has to do with the area it's in. So that's talking about what's the crime rate like, what are the school districts like, okay? And both of those two are rated with the system the same as grade school, where it's like, C minus, B plus, stuff like that. So John, as far as properties where if somebody walks up to you, they got it in hand and it's got your name on it, can you describe that ideal property, please?
Yeah, absolutely. So we like B class properties, right? And to your point, the way we think about B class properties, those are going to be properties that are typically within about 20 or 40 years of age. Those are going to be maybe 15 to 30 years of age, but they're going to be in properties where most of the major stuff's updated. The roof's in pretty good condition. You might need a little bit of work, but the electrical, the plumbing, all those kind of big mechanical things are updated to current code. Maybe you have to do a little updating here and there. But generally speaking, it's going to be more of a lipstick type of thing, right? Properties in the bones are good, the structure is good, but maybe that kitchen's a little dated or the bathroom's a little bit dated. So we're going to go in there and do more of a cosmetic lift to it. Now we're willing to go a little bit beyond that, but we don't want to be in there, knocking down walls and doing full gut rehab projects. That's just not the way we like to operate. We feel that those deals for us have more risk. They also have more reward. So to be clear, they definitely have more profit potential. But we think that, we like to go in and focus on more B class properties where they're making money day one. We just want to go in with the business plan to help them make more money. So those are some of the things we look for. We are typically looking for 100 plus units. We're looking in growing areas, like the fact that you classified that B class, or the class is also going to location. So a good way to think about that for us is about desirability. A class is going to be that luxury high-end neighborhood, the best schools, the best restaurants, the places where everyone wants to live, extremely safe, very low crime. B class is going to be very desirable areas, not necessarily the best, but desirable places that people have no problem living. Crime is moderate to low. Good restaurants, good access to the rest of the city. When you get to C, now you're talking, more workforce, right? These are areas where crime is going to be a little bit higher, not quite as desirable, but it's fair. It's fair. It's okay to live there, not a big deal. But a place where you're definitely going to have to look a little bit more block by block and street by street to figure out where you're at. So for us, we like B class properties in B class areas. If we can get a B class property in an A class area, even better. But one of the reasons for us is we want to make sure that we can go in there and do more cosmetic upgrades to the property. We don't want to go in there and rebuild. Okay. We don't want to be building a brand new property, even if it already exists. It's not really our goal. The other thing is we want to make sure we're in desirable locations. I want that community to do some of the heavy lifting, because you cannot change the location. So I'd rather be in a better location with the worst property than have a great property in a rougher location. So I can't change the location, can't change the neighborhood. So we try to focus on areas where there's already demand.
Yep, that's beautiful. So my next question, you mentioned already when I pulled out the die that you have multiple roles that your team takes up, and but the neat thing that I find about commercial real estate is that people, because they have these swim lanes and nobody is all of the size of the die for any meaningful amount of time, we really need each other more than some industries. But one thing about our history, our experience, and whatever, we all still have a certain we all have a certain type of investor or professional where we can disproportionately help them. Me personally, because of my background in marketing and digital frameworks and all that kind of stuff, I'm always looking for the sponsor KPs because they already have a foundation in their business that can support a guy like me and really make it, fuel to the fire. Whereas when you're first getting started, it's more grunt work. You need, just somebody who will just work and doesn't necessarily have to have a ton of strategy to it. But John, as far as you go, who are you best suited to help? And don't entice investors if you have any 506B raises right now, because that's not okay with the SEC and stuff.
Yeah, no, absolutely. So you're saying as far as active investors, who are we best suited to help?
Just anybody, like it could be a newbie. Just you're like if you do have an active 506B, you're just not supposed to be saying like, "Hey, come on
Yeah.
and invest with us."
Listen, so we're all about education. The way I look at it is this: many of us have similar goals. They're going to be a little bit different. Going back to kind of the 5 reasons people invest that you pulled up earlier, most people are looking for one of those reasons, right? So it depends on where you're at in your journey. I have really worn all the hats. I've been the operations lead. I've raised all the capital. I've been the sponsor. I've oversaw, JV deals where I hired. I'm not a contractor, but I've hired and oversaw contractors and oversaw property management. So I've worn all those hats, right? And I know what I do well and excel at and enjoy. And I know what I do well, but I do not enjoy. And I know what I enjoy, but I do not do well, right? And I know what I do neither of, right? So with that said, I try to focus on my skills in my lane, and then I support that based on what the deal needs with other folks around me. So that's going to depend on the deal size. Typically for me, my background is also in marketing. So I'm pretty adept at understanding the business plan, being able to look at, a situation, understanding what could be there, doing market research, and really recognizing, okay, hey, if we did this, this, and this, here's where that upside potential could be. But also putting together the story, understanding that story, and getting alignment from the team, from the contractor, the property manager, other investors, getting the team together so we can go in the right direction together. So that's really my skill set, is focusing on that. And because of that, I'm able to attract both passive investors who want to learn or get passive income, but also other newer operators who want to gain some experience, partner with us on a deal and figure out how they can add value to what we're doing. So I have people who maybe have great experience managing contractors, and that's something that they may come and partner with us on, and that's a role they play. I have others who have great market knowledge, particularly if it's in a market that is a little further away from us. So that may be something where we lean on them for their market knowledge. So it really just depends on that exact deal in that exact situation. We're always looking to connect with other people, and then we can determine how we add value from there.
Awesome, awesome. And the way that people reach out to you, we kind of cross paths on LinkedIn. I saw you speaking at the GOB Network conference. That was really awesome. I really appreciated what you said there. But as far as the best way to reach out to you, like LinkedIn's always a great way to catch me. Is LinkedIn the best way? Is there a website that's better, or how should people reach out?
LinkedIn's one way for sure. You can just reach me on LinkedIn, John Casmon. The other way I would say is we have a sample deal on our website. And if you are newer and trying to wrap your head around all this stuff, there's a lot, right? Dan threw a lot of terms at you, a lot of things as far as roles and responsibilities. So I have a sample deal. And with that sample deal, you can really start to dissect what a deal package looks like, whether you want to be on the active side or you want to be on the passive side. So you can start to understand some of the terminology, some of the deal structures, understanding what to look for in the market or the look for in the business strategy, what to look for in the operational team, right? So if you want to learn more and figure out how you either A, lead your own deals, or B, what to look for when you're looking to invest passively, check that out. And it's at casmoncapital.com/sample deal. You can download that, and you'll also get added to our newsletter.
Beautiful, beautiful. So the only thing I have left then, it's actually not for you. It's actually for you in the audience there, which is under my QR code. You'll notice it has to do with this campaign. There's this big ugly red button, and you really should get it out of your life. Okay, it's terrible. And all you have to do, so you don't have to look at it again, is you take your mouse and you click on it. And then that turns gray. It's the one that says subscribe on it. And if it turns gray, there's this magical power, which is super duper important. What it does is it magically means that YouTube will start paying for these videos instead of me, which is better. And I'd really like it if you could help me out with that. Jokes aside, though, what it really does is it means that my videos might show up on your list of suggestions. There's no guarantee of that because that's just not how it works. It's absolutely free. They don't ask for your credit card or any of that silliness. It costs you nothing. And you don't have to watch those other videos of mine because you've already done me an enormous favor by joining me today. Just like John, you've done me an enormous favor by joining me today. This has been great getting to know you a bit better.
Absolutely. Thank you for having me on.
All right, thank you. All right, awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 BME, everybody.